The beginning of the new year brought catastrophe for thousands of LA area residents. Over 12,000 homes, schools, and businesses to date have been destroyed by the raging wildfires that began on January 7th. It's at times like these that homeowners need all of the practical and emotional support that they can get, especially reverse mortgage borrowers. That's what we're going to focus on today. So if you're listening or watching, then you're going to want to pay particular attention to a recent column in Reverse Mortgage Daily's Housing Wire. Now, it's imperative for reverse mortgage borrowers, says RMD, to contact their insurance carrier if their property has been damaged in the ongoing Southern California wildfires, and to let their loan servicer know of anything that could impact their occupancy due to the terms of the Federal Housing Administration-backed reverse mortgage loan, or the home equity conversion mortgage. Now, for me personally, I would add this. It's imperative for you, the originator, to reach out to these borrowers. So few, if any, during this traumatic time are going to be mindful of contacting their loan servicer, obviously. Now, there is an exception for those who live in a presidentially declared major disaster area. That, according to Jared Scriballa, who we've interviewed before here at HECMWorld. He oversees the servicing and asset management at RMI, or Reverse Market Insight. Scriballa said, HUD does not require servicers to follow separate occupancy requirements for natural disaster victims. However, they do provide some relevant guidance for servicers on properties impacted by a PDMDA. First and foremost, borrowers should contact their servicer immediately if they are impacted by a natural disaster, either by damage to their property or if they have evacuated their property. The servicer will be able to evaluate the borrower's circumstances, then work with them, and then provide any specific instructions and any next steps. Generally, borrowers should be reaching out to their servicer for any temporary absences from the property of more than 2 months. While the U.S. Department of Housing and Urban Development does not provide a separate occupancy requirement for servicers to follow for any borrowers that are inside a presidentially declared disaster area, there is guidance in the Single Family Housing Handbook 4000-1. HUD announced just last Friday that the 90-day HECM extension, along with other mortgage relief, is now in effect. That due to President Joe Biden's disaster declaration made on January 8th. Now, for full details, go to Housing Wire. We've included a link to that article in the show notes, but now is the time to look for any of your previous borrowers who do live in the affected areas and reach out. A recent column in Yahoo Finance entitled 4 Signs They Found the Right Reverse Mortgage Lender caught my attention last week, and here are 4 signs that one has actually found the right reverse mortgage lender for their situation. This according to Stephen Perangi, an attorney and owner of Alpine Mortgage, a mortgage lender. Now, it says a good reverse mortgage lender will educate the homeowner about their options rather than rushing them into a decision. Adding, since reverse mortgages are complex financial products, you want to go in fully informed on their benefits and potential drawbacks. The right lender will spend time explaining how home equity conversion mortgages, or HECMs, work, and make sure you understand both the benefits and the obligations, said Perangi. They should proactively provide information on the following: mandatory HUD counseling requirements, how the loan proceeds can be taken, whether it's a lump sum, line of credit, monthly payments, or a hybrid plan or combination. Also, ongoing property tax obligations and homeowners insurance and maintenance, and the impact on heirs and estate planning. And this last one's a little tricky: alternative financial solutions if a reverse mortgage isn't the best fit. Additionally, they say that a reverse mortgage lender who is doing a good job should have no problem in meeting with the homeowner several times to answer all of their questions without applying any pressure. This is a big financial decision that shouldn't be rushed. And on a similar note, says Perangi, since the application and closing process can be somewhat complex, he recommends that you find a lender that keeps you informed every step of the way and responds to phone calls and emails and answers questions clearly and completely, adding that this builds trust and it reduces the stress of the loan process. Depending on who you ask, Americans await President-elect Donald Trump's non-consecutive term either with anticipation or dread. Either way, today we're going to look at two of the three ways that the Motley Fool says that older Americans may benefit from a Trump presidency. First, while Social Security may not have been the most important concern for the incoming administration, Trump has made several comments about some of the changes he'd like to make to the program that could directly or indirectly impact benefits. So the Motley Fool looks at three of the most significant changes to Social Security and what they may mean. In a recent social media post, Donald Trump said that seniors shouldn't pay any taxes on Social Security. And personally, I agree. Now, he was referring to the Social Security benefit tax that seniors owe if their income exceeds a certain threshold, But Trump can enact this change without congressional approval. But if they did, this would increase the benefits for many Americans who are receiving Social Security benefits, at least for the next few years. However, the Motley Fool notes that that strategy, if enacted, would remove one of the three funding sources for Social Security, leaving it reliant on payroll taxes and interest income from a rapidly depleting trust fund. Then there is the elimination of income tax on tips and overtime. Again, Trump's proposal would require congressional approval. Now, while that may help seniors who are still working and are service workers and part of their income is coming from tips or overtime, it would also decrease taxable Social Security income, which of course helps to fund the program. Now, in the final analysis, seniors desperately need this, their cost of living to be reduced or stabilized. If accomplished, that would be the greatest gift that the Trump administration could give to older Americans who are now living on a fixed income.